I've identified 20 specific catalysts that could send oil prices higher, each with estimated probabilities and price impacts. Let me now show you how all of this converges. We are currently in quarter four, 2025. Oil is trading around $65 per barrel for Brent. The financial media is bearish. The EIA is forecasting $54 by quarter one of 2026. Hedge funds were heavily short until the Russian sanctions caused that squeeze. January 21st, 2026, EU and UK bans on Russian oil products take effect. Supply chain chaos begins. January through March 2026, OPEC Plus production pause. No new supply added. Russia's national wealth fund approaching depletion. Venezuela military situation potentially escalating. Quarter 4 2025 shale production data released, potentially confirming decline. This is the highest risk period. Multiple analysts are calling this the critical convergence window. Quarter 2 2026, April through June, Russia potentially facing collapse or desperate actions. Summer driving season demand surge, hurricane season beginning in the Gulf of Mexico. OPEC spare capacity continued to fall toward that 2 million barrel per day minimum. Quarter 3 to quarter 4 2026, spare capacity at absolute minimum. Shale decline becoming undeniable in the data. Saudi Arabia facing extreme physical pressure. EIA and the IEA forced to admit their glut forecasts were completely wrong. Narrative collapse. I've identified 20 specific catalysts that could send oil prices higher, each with estimated probabilities and price impacts. The moderate convergence scenario with 50% probability gets you to $90 to $110 per barrel by quarter 3 to quarter 4 of 2026. That's shale decline confirmed at 1.5 million barrels per day. OPEC extending the pause and beginning to restore cuts. Russia's shadow fleet crackdown removing 500,000 barrels per day. India demand exceeding forecast and spare capacity at the 2 million barrel per day minimum. The strong convergence scenario with 25% probability gets you to $110 to $140 per barrel. That's accelerating shale decline above 2 million barrels per day. Russia taking desperate action. Spare capacity exhausted by disruption event. A Middle East incident between Iran and Israel. The EIA and the IEA narrative collapse. And China extending strategic stockpiling beyond March of 2026. The extreme convergence scenario with 5 to 10% probability gets you above $140 per barrel, potentially to $200 or higher. That's the shale collapse. Russia using a nuclear demonstration or production collapse, Strait of the Hormuz closure, China invading Taiwan, and OPEC unable or unwilling to offset.